In a world where there is an abundance of unsecured loans readily available, why would you choose a secured loan? For starters, it's easy to get higher loan amounts. Shocked? Stay with me till the end of this video and I'll tell you everything you need to know about secured loans. Hi everyone, I am Anirudh from Clear. We are India's largest tax and financial service platform where we have served more than 6 million tax filers. Subscribe to our channel to get investing tips and learn more about growing your money. Secured lending is a form of debt that requires you to pledge an asset or security as collateral to avail the loan. In the event you default on your loan repayment, the lender has the right to repossess the asset. Now that you have a basic understanding of secured loans, let's jump into the features or advantages. As we have already discussed, secured loans tend to fetch you larger loan amounts. You have more leeway to make flexible repayments. You don't have to worry about fines and charges on settlement payments, pre closing your loan, making big payments, etc. Secured loans generally have lower interest rates when compared to unsecured loans. This is because banks have a certain degree of confidence in your ability to repay the loan since you have an asset as collateral. They generally have more flexible repayment terms. Loan approval is faster. There is generally no need to have a source of income to obtain the loan. There is a no need for a guarantor. The interest paid is tax deductible. Did the explanation make sense so far? If it did, write clear in the comments below. While there are so many pros of secured lending, here are some of the cons. In case there's a default in payments, you face the risk of your assets being seized. Secured loans usually involve a lot of paperwork. Generally, the value of the asset is much greater than the value of the loan. While there are plenty of secured and unsecured loans readily available in the market, it is imperative to understand the differences between them before opting to choose one over the other. Here are some of the main differences between the two. While secured loans require an asset to be pledged as collateral, unsecured loans don't. The borrowing limit for unsecured loans is typically lower than secured loans. This is because lenders have a certain degree of confidence in your repayment ability since there is an asset as collateral. However, this limit is directly proportional to the value of this asset. Your credit score and your general financial health dictate to a large extent eligibility for availing unsecured loans. On the contrary, secured loans can be obtained with relatively bad financial health. Interest rates are typically higher with unsecured loans. However, since the lender has collateral to fall back on in case of non payment, interest rates on secured loans are lesser. Now that we have a fair understanding of secured lending, let us take a look at the different types. With a mortgage, you put your home or property as collateral to acquire a loan. In the home equity line of credit, you can put your home as collateral to obtain finance in the form of a credit line, like a credit card. When you take out a loan to pay for your car or motorbike, your vehicle is used as collateral. If there are defaults on payments, your vehicle could be repossessed. A land loan is used to purchase land. Similar to auto loans, the land itself acts as a collateral in this case. Business loans are usually taken to buy equipments, pay wages, invest in business projects, etc. In this type of loan, there are a number of things you can use as collateral. For example, inventory, equipment, or your land or building can be used to secure a business loan. So folks, I hope you enjoyed watching this video as much as I did telling you about secured lending. You can start your investment journey by downloading the Black app by ClearTax from the link given in the description below. Download Black app to help you grow your wealth and invest wisely. Also, don't forget to subscribe to our channel for more finance related content. See you soon.